Good afternoon, everybody, or almost afternoon. This is Jeff Scott. It's November 4th. As you can see, it's 11:50 a.m. on Sunday. Futures are not out and available, so this will be uninfluenced by any futures. I entitled this week's edition, Did Apple Just Start the Next Leg Down? I'm just going to, not a spoiler alert or anything, just say this is a market that it's hard to really say anything because if we wake up and there's a hint that there's something going on positive with China, everything else changes immediately. And we are going through strong seasonality, but if anything, this market feels like it wants to go down. This is for education purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I use a lot of programs. I paid for all of them. No one pays me to say good things or bad things about them. Trading involves risk. You and you alone are solely responsible. From time to time, I'll talk about trading options, and I just want to call out that options are considered dangerous and risky, and you should know what you're doing before you trade options. You can certainly lose your principal very quickly. I entitle all my educational programs, Be Your Own Guru. That's what I do. I learn from very smart people, O'Neill, Morales, Katcher, Ian Woodward, Ron Brown. John Person really helped me put it together besides his books, his mentoring, his friendship, and his indicator package. Van Tharp, the king of money size and money management, position size and money management. George Lee, a great trader from Western Canada, who I've had the pleasure of spending many podiums together with. And then Cigar from Superior Profit, who's got some indicators that are very complementary and does things a little differently than I typically do, but also a top-down approach. My next meeting here is November 28th. This is my only sole meeting of the year. I'll be participating with George Lee in Vegas in 2 weeks, I believe, but I'll only be probably a third of the time there. It's $500. You can attend live, or you can sign up and receive all the goodies via a Dropbox. For $500, you'll get pre-seminar webinars that will start next week. I'll be sending out invites sometime this week. I've been swamped with my day job. We'll do my typical seminar. I've added rental income, how I use short-term options to create some positive cash flow during periods of time when the market is not conducive to heavy trading. Post-seminar, we'll do additional live sessions. As you can see on the right, I've had some positive feedback, especially on my Netflix trade, where people pay for about a decade worth of meetings. If you attend live, you'll get dinner with me on Tuesday night, either on my yacht in the lower right-hand corner or at a local steakhouse. During the meeting, I'll provide ample food and drink. Screencast of each presentation and PDF of all slide decks will go out probably within 24 hours of completion of the meeting, and that will go to all live and Dropbox-only attendees. And then I'm happy to share my non-proprietary, non-copyrighted indicators with the folks that attend. Hoping to play golf on the Tuesday. I won't know probably until we get closer. Right now, there's only been one positive on that. And I don't plan an internet broadcast. I mean, I guess if there was an overwhelming number of Dropbox folks, then I'd go out and spend the money to do that. But right now, it doesn't seem like there's enough people to justify it. And if you're interested, I need to know, email me at my hgsidoc@gmail.com. Registration's confirmed by paying at PayPal. Then you should receive a confirmation back from me within 24 hours. If you're attending John Person's meeting, then I'll give you an additional $100 discount. What do I need on my desert isle? I have a lot of programs. I need TradeStation and Thinkorswim with my suite of indicators. I need HGSI and EdgeRater, and I'm not against any of the seasonality programs. In fact, I have each of them. This is a shameless plug for HGSI, of which, as I said, I don't have any money that comes from it, but basically, here's the free 30-day trial. If you click on that link, no credit card necessary. And in addition, under investing strategies, you'll see hundreds of videos by Ron Brown, myself, and others. Stock patterns are cyclical. We're certainly living on the right-hand side here. All we've done, and we'll show you the pictures, is we've moved back up close to the 200-day moving averages, except for the Dow futures that have broke above them. We've just retraced in a downtrend. We're still in a downtrend until things change. Now that could change in a dime, and we're in a market that is in a positive seasonality. So if I'm sitting here in this red circle, that means I bought bear call spreads, I bought puts, sold calls, shorted stock, and have contra ETFs. I'm also still raised cash, have smaller positions, and sold some premium. Sector review on Friday. Friday was an interesting day unless you had a big position in Apple. I did buy, I covered myself with puts. I sold them. Maybe I should have kept them. But you can see it was a pretty mixed day there's a lot of positive throughout the market, except if you have Apple. I think Apple was due for 120 or 130 negative Dow points. So if you take Apple out, it was a pretty okay day, I guess. It would help the NASDAQ 100 as well. Major markets, let's take a quick look in my Thinkorswim. And let's just open this up. I like looking at the futures because I think they reflect sometimes more of the story. These are the E-mini futures. They broke below the 50. This is weekly. I want this to be daily, so let me change this back to daily. So I say it broke below the 200 daily moving average, which we'll see in a second. So you can see it broke below the 200, and notice it ran right up to the 200 in reverse. That's scary because here's support, becomes resistance. Finished with the doji, it could be a reversal signal. We're going back down. But if we start trading above the high end of the doji, then that would tell me to start thinking to the long side. The 50-day is turned down, but it's still quite a ways above the 200. If I look at the NASDAQ futures, same exact story. It did pop above the 200, closed below with the doji, long-legged doji. The 50 is turned down. The 17 is broken below the 200. These are not bullish charts, at least over the period of time that we're looking at. For example, on the Dow, I can go look at a full year's worth. And let me take it out. So we've had 2 run-ups and then pullbacks. And we've pulled back here. Now the Dow actually looks better in that the Dow is closed above the 200. So this one looks the strongest thus far. The Russell 2000 above the 50, but still well below the 200. If we look at the VIX came down some, but formed a doji on the 17-day simple moving average. And the US dollar has been trading up, did pull back to what's probably support and bounced. So when I look at these markets, what I see is pretty deep pullbacks everywhere and concern about some short-term overhead resistance. Again, in the setting of what might be considered and is considered strong seasonal markets. You can see on the weeklies that we've also broken down, but they don't look nearly as bad as the dailies. But we're down straddling that 50 weekly. If we move down to the 200 weekly or 1,000 daily moving average, we're all going to be in a world of hurt if we stay with any long positions. So go back here. Caution is certainly warranted. Rates moved up, both the 10-year and the 30-year this week. The spread actually turned up. So here's inversion when we get down to the flat line. But as I said, it turned up some. AD lines actually moved up this week a little bit. And you could see here in the NYSE in dark white here, and each of the ETFs turned up and the bonds turned down. Breadth improved quite a bit. Stocks above the 200, stocks above the 40. The 3-month new high, new low ratio, as predicted, bounced off and moved up considerably. All of this are consistent with the bounce. The problem is it may not be a very long-lasting bounce, and Friday the bounce lost some steam. On the McClellan oscillator, you can see on the daily, this is what we've done here. I was just circled here for comparison's sake how we bounced around in the beginning of this year, and to think that we have a V bottom to new highs is probably not going to happen. We did get down below 3,000 on the negative 3,000 on the summation index with the bounce. And on the weekly here, you could see comparing this pullback with a couple of pullbacks in 2015 and 2014. 14 does look like a V. 15 and 16 were much more complex. Current buckets are neutral. You have half the stocks are above the midline of their Bollinger Bands, and very few stocks are below the lower Bollinger Bands, all consistent with a modest recovery this week. No Hindis, but you got to have new highs, and you could see we had less than 1% new highs on both the NASDAQ and the NYSE. The market tone turned green. This is the Woody indicator, as well as most of the sectors here, except for, I think is that utilities? Canaries in the coal mine. We almost look like we're consolidating underneath the 200 with a sideways move, and the 50 about to break below the 200. And my summer solstice leaders, which I chose September 2nd, they don't look as dead, but they still got to get above this 50-day moving average. Another busy week for earnings, so I think it's important, as it says in the bottom, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. And you could see we got Ferrari, Mylan Labs, Marriott, Mosaic. You can go through the list. Etsy, Twilio, Turtle Beach. A lot of earnings. Roku. You need to know your earnings dates because, especially in the market we've been in, there's been substantial volatility. From a news perspective, we've already got the monthly unemployment out of the way. Looking for red dots. We got energy and jobless on Wednesday, jobless claims on Thursday. And we've got an FOMC meeting on Wednesday. Be interesting to see if they talk down interest rates at all. And by the way, we've got this thing on Tuesday called the midterm elections. So because of the elections and the Fed meeting, it's actually a pretty heavy news week. Market thoughts. Major indices are up on the week, although down a bit on Friday, except for the Russell, which held. Apple earnings report and call question growth in phone sales while company eliminated phone unit sales. Will company remain a darling as it moves from technology sales to services company? Didn't work for IBM. And don't underestimate their ability to buy back stock. Markets improved over the past week, but we're still in intermediate downtrends with resistance overhead. The NASDAQ, S&P have a doji below the 200, while the Dow has one just above. News will dominate again, both China, Fed, and economy. And the midterm elections are Tuesday. It looks like might be a tough night for conservatives. I've heard a lot of talking heads say the market will rally after the midterms, which is funny because of the same talking heads that said the market would drop after Trump won. So maybe that's a contrary opinion. It'll be interesting to see. Everything I see suggests that the Dems are going to take at least the House and perhaps the Senate. But who would have thought Trump would have taken the presidency? So we don't know anything until we know anything. Typical top-down agenda. Let's take a look at some charts. Just for a quickie, let's look in TradeStation and let's look at some of the major indexes. So here's the E-minis. And we can see that on the E-minis, we've got a buy signal came in this week. Here's that doji going into areas of resistance. Weekly sell in a red bar and a monthly sell. So we got a short-term retracement, but we got longer-term bearishness. That's all I can really say. I think this market's at risk, and I think the long-term signals are worrisome here. If we look at the NASDAQ futures, I guess I have to change this one more time. If we look at the NASDAQ futures, nope, hold on a sec, I'll get this figured out. Well, it should be working it, so let's see where I'm at. Nope, it's the local, so I'm going to go back here, try the local one more time. Local link. All right, well, I give up. That should definitely be changing it. All right, so I better go up here. Well, we're going to skip that because it doesn't seem to want to be playing what it's supposed to. See, we'll have to do it over here. something is not working well with my TradeStation. Who knows? TradeStation is quirky. The point was that this is a market that's still dangerous, where we have longer term downtrends. So a short-term retracement is just that. And oh, by the way, I don't play pullbacks the same way in a downtrend as I do in an uptrend. So, and breakouts haven't been working. This is a very tough market. So if we go into analyst groups, major markets plus, hit the warehouse view, we should have 24 groups pop up. And let's do the top-down view. And we'll see that on Friday, the small caps and mid caps led, while a lot of the commodities are on the bottom. The dollar showed strength, the NASDAQ, and then the S&P 500 is in the middle. Let's quickly look at our major markets. So we talked before about these bingos that occur. These are sort of the baby out with the bathwater. This is the cash markets. They'll look different than the future markets. Let's clear everything that I've drawn here because none of it matters anymore. So we have trying to get back to that 200-day moving average. I don't know if that's called a dark cloud cover, but that, we've stalled on our move up. I would deem this resistance, and I have concern that we'll fall there and continue falling. Until proven otherwise, this doesn't make me feel very bullish. If I look at the Dow Jones Industrial Average, see if that one makes me feel any better. A little bit, because it held here at the 200-day moving average. It's still stuck in between moving averages. This one clearly looks better, although it doesn't look great. The NASDAQ composite looks a lot like the S&P, struggling to get back above that 200. And then the Russell futures actually looks a little bit better, although they're way down below the 200, formed a doji, but they were positive on Friday. As we mentioned already, the dollar has been relatively strong. The VIX is still elevated, although it's come down some. Still above that 200, and therefore, in my mind, elevated. And gold, despite the dollar strength, I guess because of the market concerns, continues to hold steady, although it's been tough to make money in gold and silver this year, especially with the rising dollar. If I go and I look at what industry groups are leading, you'll see clear strength because the two-day force is a short-term 174 total. On the two-day force up, we have 76. On the two-day force down, we have only 17. When you look at the 17, you see a lot of energy, exploration, midstream, integrated, refiners. So energy was clearly weak. You have some utilities here, and you also got large pharma as well, healthcare supply chain. So a lot of the things that have been doing well did not do well this week. If we go back to the two-day up, we can get an idea of what was working. So telecom carriers have been strong. I've liked this stock for the last couple of weeks. It's had a 20% move. So it's probably getting a little bit ahead of itself. But let me set my chart up. Give me a second. There we go. So we got lower left, upper right. It just broke out here. It's in a healthy pattern, sort of a cup and a handle and a breakout. A kahuna, a Bible gap up, doesn't make any money. NII Holdings has been looking good for quite some time, and its volume is fine. Immediately we get to the index. Let's see if anything else looks good here. These all had a move on Friday. This one is known for its dividend, 10.3% CenturyLink. And I usually buy when they get cheap for their dividend. So here's AT&T, which is at 6.6%. And I was talking to somebody today whose son is in telecommunications, and he was suggesting that the carriers are going to benefit from this conversion to 5G. I think so will Apple. We'll all be buying new phones and new devices. All right, so telecom carriers, a little interesting. Semiconductor devices, that's good if we're bullish on the market. AMD is the first one. So what do I see? Pull back to the 200. It looks worse than, looks like the Russell. It's in a downtrend. It's kind of beat up for my taste. Next one is, boy, it's slow today. Microchip technology. I don't know why this is, my computer is not happy with me today. And I think I probably have too many things. I'm going to stop it and restart it in a second. All right, I've killed a couple of programs. Let's see if that makes this work any better. All right. So we were looking at semiconductor devices, right click, AMD. Let's see if we can go down the list. All right, so AMD, as we said, is too far down the pattern for my taste. NXP, is that the, oh, perfect, okay. Got to get above the 50. These are all in downtrends. And is this shortable here? Maybe. Pull back into the retracement downtrend. Micron, no. NVIDIA, you know, these look as shortable as they are buys. I don't see anything here that tells me to run out and buy them. So semiconductors, they may have had a positive day, but I haven't seen them change their trend. So I did like the first group, life sciences. So this is a buyout, Pacific Biosciences, but it's actually got a teaching point to it. I noticed the Pacific Biosciences because it had a couple of days of kahunas. It had a mobile breakout from a squeeze. So you had nice signals, stalling day here, and then a takeout. So you had 2 or 3 days that sort of suggested that this was being accumulated. Illumina, I believe, is the acquirer. This has been a big mover. They supply a lot of the chips that go into next-gen sequencing, which is critical for cancer care. I'd like to see it get above the 50. Exact Sciences, you know, I don't like their fundies. I'm not sure I like their product, but they have broken above the 50s with a kahuna. And here's the index. If you're saying, but Jeff, you haven't shown me any stocks that look good. Yep, welcome to this week. Biotech. Now, I got into LABU this week and had a nice quick return, but I'm still nervous about the big guys. So let's look at some. I've got a few to tell you about, including one that I'll sign an NDA next week, so I want to give you some clues about it first. Exelixis has been in a downtrend. I do like this drug. They make a drug for kidney cancer, and they have an indication for liver cancer coming. They popped up above the 50 with a kahuna. I like this company. It's still in a downtrend. I will consider it a risky buy. Repligen, don't know anything about it, except it had a huge move on Friday with a Bible gap up. Doesn't look like it makes much money. Does have some revenue, probably worth doing research. Bluebird Bio, I think Celgene has an investment in them. See, downtrend, ran up to the 50. Still not ready to jump in on this one. Alexion, you know, sure, it's the bottom part of a trend moving up to the moving averages, too choppy. Sarepta, this one looked interesting. Again, kind of choppy here, but a bunch of kahunas got back above the 50, mobile breakout from a squeeze. Does not make money. Intercept, Sage has an approval coming. They had a positive meeting with the FDA on Friday. They'll probably gap up on Monday. Argenx has some preclinical products, one in hematology that looks interesting. They'll be reporting data at the ASH meeting. Also use in immune disorders. There's the index for biotech. Here's the problem. Celgene, downtrend, doesn't look that exciting. How can Celgene move? Regeneron, downtrend, doesn't look that exciting. Here's one that I do like, and I just want to introduce you to this. This is called Loxo Oncology. Loxo Oncology has what's called a PDUFA date, November 28th. Likely will get approval of their first drug. It's the first drug to be approved as the initial approval for a specific genetic marker, and regardless of tissue type. It's an exciting product. It's very interesting and effective. It's the first of several in their pipeline. I've seen targets of 220, 225. I like their story, and their charts at a good point to buy. So that was one decent one. Going down the list, communications equipment. Here's a couple of things that were left for dead that have come back. Arista Networks had a big move on Friday, still below the 200, even though it had a bunch of kahunas. Might put it on a watch list. Acacia did break high above the Bible gap up, and that's one that might be worth taking a look at. And then here's an old name, Motorola. Probably as good a chart as we've seen. It's a little loose, but big pull up, run up, pull back to support, and a breakout now from the 50 with multiple kahunas, pocket pivots, mobile breakout from a squeeze. Good earnings per share growth, at least in the short term. I actually like this one. I'm going to add that to my buy watch list. And then communications equipment. Back. Specialty Pharma Index. There have been a number of scientific meetings, and they'll continue through until the second week of December. So a lot of these have news-driven, don't know anything about AcceleRx, ACRX. These are what's driving, I think, LABU. Some of these smaller companies breaking out there, don't know anything about them. They've done it before, and they fail every time. Probably wouldn't chase it. Esperion, they have a lipid drug that might reduce cardiac deaths. Finally breaking above the 200 here. It's been a high flyer in the past. Amarin had some data. I think this is the fish oils that reduced deaths. Probably too late to buy that one. Neurocrine Biosciences, a nice pullback here. Acadia, I broke this one on the breakout, and it's done nothing. Gone sideways, but staying above the 200. And that's the index. So some of those look interesting. Still not seeing a whole lot that I want to jump up and just nail. Consumer products, Fitbit and Roku. Let's take a look at them quickly. Fitbit broke out above its moving averages, cheap stock, big revenue drop. I don't know the story enough. I don't like it. And Roku is one that I own, that I sold, that I might want to get back into. I may wait until it breaks above the 50 though. Does not make money, but money's coming, and I use one of their products. It's a pretty good product. Back. I'm just going to go through the top 10 groups and show you my buy list and then say goodbye. Discretionary, Amazon, is this a buy or a sell? I think it's a real question. And since I still have some, it's a real question. Do I cover my puts that I protected? It's sitting on the 200. Does it stall there and come back down, or does it gap up? If I look at the weekly, you'll see a huge hand formed right there at the 50. So is that a stopping signal on support? I think it'll be what's the word I like to use? News driven, and market driven, but it's at an interesting point. I don't think I have an edge. Mercado Libre, nope. eBay, nope. Here's a Chinese e-commerce play. It's about as cheap as I've ever seen it. It looks to me like it's trying to put in a bottom. It had a kahuna there. This might be a fun thing to play, especially if China seems to firm, which it did at the end of last week. But, you know, you're basically risking $6. That's all it can go down. Casinos and gaming, boy, I want to get back into Win so bad, but I don't want to get back into Win before it stops going down. It used to be $180 with $200 targets. Here is Caesars, downtrend, hard to buy that, failed at the 50, ISO failure, typically means it's going down to retest. Win Resorts, you want to, you know, how can you buy this? You're probably better off shorting it. Here we were, when I bought my first boat, it was like 100, it got above 200, and then the controversy started, it ran back up, and it's just been an almost free fall ever since. So why do these make the positive number? Because their move over 2 days, Thursday and Friday combined, were very positive numbers. Then lastly, on the top 10, apparel, footwear, Under Armour. I've been burned by this stock before. Last week I talked about it was up 13% in the week. Under Armour gapped up on earnings, looks pretty good. Michael Kors not so good. More Under Armour. Nike reports, December 20th, so its earnings are already out for now. Still down in its own. Ralph Lauren looks a little bit more interesting, a sideways correction and a move up on Friday. Not much earnings. PVH, no. VF Corp, nope. Here's Decker's Outdoor. So this is what it looked like on Friday. Certainly looked good last week. It made my list. I don't remember if I bought any or not. Here's where we were sitting on Friday, and then it really popped this week. 1, 2, 3, 4, 5. Probably getting tired on this run and probably not willing to chase it. Apparel Footwear Index. So that's the top 10 indexes. I mean, this is still a market that has a lot more healing to do before you want to jump in and start chasing it, in my opinion. Let's just look at some of the stocks that looked interesting. Now, reviewing. When I say I put it on a buy watch, I stick it into a watch list. So for example, we'll look at this in a second. If I go into TradeStation, the best thing about TradeStation is radar screen. So I take the stocks that I thought were potential buys, and I put them in listed here, and I look for flashing signals to occur starting Monday, which would tell me that there's a change. I look for some of the Q signals from Cigar. I look at my green candle low, red candle high, squeeze, mobile breakouts, pocket pivots, and Bible gap ups. I look at earnings. And then, using John Person's stuff, I start to look at daily trend, the PPS signal, the prior trend, high closed dojis, low closed dojis, pivots, etc. And I start to scan and look for stocks, or screen and look for stocks that are meeting my criteria. So I can get a big watch list and just watch to see what is making it interesting. Much better in this than in Thinkorswim. So here's the things that caught my interest. Small list. First, let's look at industry groups. I got a bunch of biotech, but they're all small. Let's quickly, the only one we haven't seen yet is BioCryst. You could see it's breaking out here. It's a cheap stock coming out of a squeeze. That's what caught my interest. We have Dr. Pepper, which might be a takeout, so you'd have to check on that. I've got United Airlines. I've got a couple of small banks. I think this was is this a Brazilian bank? I can't remember. I mentioned last week the strength in Brazil, which continued the election of the right winger. So you have an uptrend, and now you have a breakout here. Kahuna, everything looks good. And this is a Puerto Rican bank. Communication equipment, we have Acacia and Motorola. I also have Stream Networks. This is a beaten up bottom fish stock, kind of almost a Jesse Stein stock. But 3 up days in a row, breaking above the 50, some kahunas, mobile breakout from a squeeze. It's got a good kahuna there. I saw this and I said, that's interesting, and it makes money. So Extreme Networks, not the world's greatest chart pattern, but that made my list. One diversified bank, which is Barclays. I mentioned VIPs already. The mortgage finance stocks, let's look at Blackstone. Good chart patterns, breaking out above the 50, lots of pocket pivots and kahunas. Green on the daily and weekly bongo, pays a 7.3% dividend. New York mortgage, almost the same chart pattern, pays a 12.7% dividend. All right, so New York mortgage, 12.7%. All right. And then on the retail side, my favorite stock that I saw was Ulta, which I have a position in. It's all because of one of the girls with the large derrieres, the family, they call it Kardashians. One of them has a new line of cosmetics that they're doing there. A breakout, a pullback to the 50, kind of a flag, and then mobile breakout from a squeeze, a kahuna, good earnings per share growth. Earnings come out in a month. I like Ulta, and I think that one of the other cosmetic stores, Sally or somebody that was part of a different company, reported good numbers. So as you can see, there's a list of stocks. I'll be watching these. Now on the short side, I'm a lot less confident because I think this market's going to be whipsawed, especially with the election. Now, 2 weeks ago, my shorts way outperformed my longs. Last week, my shorts went up, even though because the market was strong. So I use these more as an indicator. And as you can see on the short side, I have some REITs. I've got some managed care. I got a biotech and Biogen. I've got aircraft and parts. And what I'm looking for typically on my shorts, usually they're expensive stocks. And I'm looking for stocks going into probably using their weekly typically, who've just broken down. Here's weekly 50-day moving average. And this broke down this week with a pocket pivots, kahuna to the downside. The bongos have gone red. And this has been a leader that seems to be broken down. And I find most of these by looking in TradeStation. And in TradeStation, what I'm looking for, using some of John Person's stuff, let's just pick, we'll look at LLL. We're going to try to look at LLL. I got a feeling I need to reboot it. Let me try one other thing. All right, here's LLL, maybe. Come on. I just think there's too many things running on my computer. So what I saw here was a move into the resistance lines here. These are pocket moving averages, and a breakdown here through trend line support. Unbalanced value has turned down. Everything's red on my indicators. The bongos are red. That's what I look for. And typically, I may short some of these. I may buy puts in them. I may buy contra ETFs. But what I really use them as an early warning signal of the market blowing up on me. All right, on that note, I think I'm going to say goodbye. Thank you all for putting up with me again. And please like me on YouTube, subscribe so you get notice of when I post these things. And please consider coming to my live event or signing up. I don't ask for much when I do these. I don't get any support from anybody. And I guess the one thing that demonstrates your support are people that actually pay me for the live meetings or for the material. So goodbye, everybody. Have a great week and be careful.